Hello, everyone. Welcome to Savvy's monthly founder spotlight interview. This is our April edition. I want to first start off by thanking Earth Ventures, Earth Hub here in District 2 in Saigon for letting us use their facilities today. This is our second interview here at this wonderful facility. Check them out online, earthventures.com. Who I have here is Nhat. He is a Vietnamese Australian entrepreneur, and he lives and works in Australia, but travels everywhere. And we'd like to have him share his story today, but the focus is really on how he was able to raise money. And in the climate that we have now, especially in the climate we have now, it's really tough, especially pre-seed and seed money, to get people to believe in your idea and help support you financially. So let's start the conversation. So now, tell us more before we go to the whole financing part. Tell me more about your product, Otrafy, what it does and how it helps people.
Yeah, sure. So right now, Otrafy essentially is a B2B SaaS platform. It's a workflow tool that we sell to food manufacturers, and the food manufacturing policy teams use us to manage the compliance for the entire supply chain.
Yeah.
So that's what we do. But it really didn't start out that way. The way Otrafy started, actually, it was at a hackathon. So yeah, it's very interesting. So I used to work in Australia for one of the big banks there, do a lot of digitization work, and I had opportunity to take a career break. So took a 1 year off and went into Canada, looking for new opportunities. Always knew to want to do my own startup, right? And as I go to Canada, I wanted to kind of hit the ground running. So by the second week, I went to a hackathon, and at the hackathon, I met my co-founder. And he basically was telling me about the problem in the food industry. He does a lot of food import from China and export to US and Canada himself at that time. And he's telling about all the paperwork problem, all the compliance stuff that he had to do manually. And I was like, let me do a product for that. So, we randomly had 4 people join the team, and then, I was like sketching out the product. We got a few people that code up the demo. And
So you an engineering background, or you're a project manager?
I'm a project kind of background.
So you can work both sides of it.
That's right. That's right. Really, really connecting the business with the tech.
Yes.
So that's what the role I played. And basically 48 hours later, I was pitching the product, and we got first prize, 10,000 Canadian dollars.
Oh wow! That's the first amount of money.
That's the amount of money. Yeah.
Right.
Yeah. So really, like, I think all of us are aspiring entrepreneur, right? I went to a lot of hackathon in Australia. I basically didn't win any, but got close to some, built up a lot of those expertise and know what to do. And then eventually got to the one in Canada. That's where I was able to win, right?
So the Canada was not the first one.
That was not the first hackathon. Like I kind of knew, like working in a bank, I was trying to figure out where can I go to find ideas to work on, right? I knew I didn't want to solve a bank problem. I wanted to solve like a out there problem. I didn't know what it was, right? And it just resonated well with this food documentation, because there was a lot of provenance, like how the food was made, how the information is transferred through the supply chain. So like that kind of gave me a lot of let's focus on that.
But that also has to do with the rule of law, the new policies and regulations. That were they in place already, or were they new?
Yeah,
in terms of provenance.
That's right.
I think it was later, right?
No, it was good timing. So 2015 in the US, the Bismarck came into effect, Food Safety Modernization Act, but they had a lag in terms of protection. So the signing to law 2015, but 2018 is when it started actually enforcing a lot of those things going through. And the timing picked up well, because and winning hackathon is not enough, because that's just like some people think your product's good. What you needed is to have users. And the first thing I did right after the hackathon was like, all right, let's go out there and find users to gonna try this prototype that I put together.
Right.
And I was in Canada, second week, didn't know anybody, didn't have family. So the best thing I did was go to meetups, like find any meetups that has like anyone that resemble anything in food. And luckily I found one where I went there, and I met this lady. She has her own organic beef farm. She has her own abattoir and butcher shop. And I was pitching her the idea, like, hey, would you want some product that will help you prove the provenance of your supply chain? She's like, yeah, let's test it out, right?
I'll be your guinea pig.
Yeah, so like at that time we had like a product that just basically a demo version that wasn't deployed, right? We ran local host and everything, and then actually said yes. I was telling the team, all right, we have the first one, let's deploy it. Let's actually, and then they're like, yeah, okay, but we don't know how. So I had to work out how to deploy. So I was like doing all the DevOps.
Was she willing to pay, or was it just?
No, that was a free pilot.
Okay.
At that stage, like, I needed to build the conviction myself.
Yeah.
So and I didn't even need, I didn't come from any food industry background, right? And like, having someone actually willing to use it for me was already huge. I was like, oh my
That's a
God.
big success already.
Yeah, like, this is like a month after hackathon, like, so it took me quite a few things. And having that first person using, and like she's like, oh shit, this is good, I like it. Like, I see my customers that are interacting with it. At that point, it's simple, just scan QR code and you can get information across the whole thing, right? And she starts customers being happy about it and asking questions. And I was like, okay, seems like, that we might be onto something. So at that point, that's when I thought like, hey, yeah, we need fundraising. That's when the fundraising really came into, because like, I wouldn't want to go fundraise before I kind of prove out my product. Like, I think I don't recommend doing just on an idea. Unless you believe it's a like unique invention, like you invented something, then okay, sure. But like most of us usually come across problems that tend to be like a usage, like a workflow, something that you
Solution.
That's right. That's right. So I'd always recommend kind of have those users first and see that there's a good validation before you go. And so for me, as I thought about, all right, I want to do this full time now. I went to Canada, I took up a job, I was working, and so I was working on this project part time, right? So like at night, weekends.
Oh, so you're working in Canada?
Yeah, I got like a job in Canada. It's like I had to pay bills somehow, right? So like, I won the hackathon, but then like a day before I went to hackathon, I got a job offer. So I won the hackathon, but I went to the job anyway. Right? So basically, work on the project at night and weekends, for until I deployed the pilot, right? At that point, I was like, okay, like, this is going somewhere. I need to work on this full time, and what's going to help me to get it, right? And I was like, look, the next milestone that will give me enough conviction for me to quit my job and do it full time is if I get an investment.
Yeah.
Right.
I think there's somebody put money in.
That's right. That's right. It's a lot of times that the conviction comes. If someone else also willing to put money, you suddenly have more conviction, right?
Exactly. And then you're also under the fire, under the guns, like, oh my God, somebody else is putting money, betting on me, I better not fail.
Yeah, that's right. That's right. That's right. So that was like, I usually build in a lot of milestones as I progress, even before like that hackathon when I won that hackathon. But like also as I built the team together, I also decided, hey, we have to go to more competition. So I took the team to like a Vancouver startup week competition pitching. So we're working together.
So the team was working for free.
Yeah,
But basically sweat equity.
That's right. Everyone was
You guys are, putting equity in. So then people were working full time, doing other things, and then working on this at the side.
That's right.
And so when you start thinking about, hey, in order, we need to do this full time, we need funding. So what was the first questions you asked yourself in terms of like to formulate how much, what's the company worth, how much they're going to sell? Yeah, walk us through that process. When you said you needed funding, what were the issues that you spotted?
Honestly, I wish I thought. Like at that stage, I just think I need money, and I did not think about valuation.
Right.
I was like, I didn't even believe anyone would put money in, right? Like, I mean, because I've never done this before, and like I didn't have any mentors around me, and like I was in Vancouver, Canada, like got to get good feedbacks from the judges.
Yeah.
Sorry.
Yeah.
Yeah, I got good feedback from the judges.
Yeah.
And then that like helped me to like, okay, but like nobody really was talking to me like, okay, here's how you should do it, right? But now in hindsight, I'm gonna tell you what you should do, right? I mean, obviously,
But why don't you tell us what you did?
okay.
And then we can see, if you had known how you could improve.
Yeah, for
So
sure.
when you raised the money, what did you do? Say,
Yeah.
I just need money to pay for whatever, and that's it?
And well, in my head was that I just need money to give me conviction to quit this job and do it full time.
So you didn't say, oh, I needed 50,000 because that's going to pay me, pay my expenses for 3 months. Nothing
No,
like that.
no. I was like, I'm gonna work for free, and I was like, willing to just get some money to get started.
So the money was more to build up confidence and conviction of the project.
That's right.
So how did you come up with the amount?
Yeah, so
Or with any
so I was just like, I was just going out there any amount, like I mean, it has to be substantial enough, right? I mean, like if someone just like a few grand, it doesn't really matter. Like we won 10 grand
Right.
for the hackathon, right? So I was like 100 grand would do it, right? Don't need any more than that. If I get 100 grand, I'm happy. Let's do it.
I mean, it's pretty serious, right? Some people like to lose 100.
Yeah, that's right. That's right. And so the first question I asked myself at that time, which I would have done it differently now, but at that point in time, being the first time founder, I was like, where do I find investors? Where do they hang out? The answer for myself was, I want to be most effective. So I think the best place is to go to conferences where people tend to come to see ideas, and I look for conferences that always usually have like an investor pitch. Right. But the next step I found out was conferences are expensive. Like, conference ticket is so expensive, and you don't want to make that investment. So what I did was I started looking for conference that looks for paper and speakers. And so I found a conference in Dallas. I was like, hey, we're looking for speakers. Send in your abstract. If you like your abstract, send your paper. We'll bring you in. So I was like, I don't have a paper, but I had a pilot that I already ran. I had someone I can talk about. So I wrote a quick abstract, 2-page. I was like, hey, if I get accepted, I'll write the paper.
Makes sense.
Right.
I'll put the investment.
Yeah. I'll put this like, and send that in. Didn't think too much. Sent it a few places, but like the one in Dallas came back. I was like, hey, we like what you're doing. Food tech and stuff, new. We didn't kind of I see a lot of other people doing this, so why don't you come and speak? But we ran out of speaker spots, so you can sit on a panel. I was like, does that mean I don't have to write the paper? I was like, yeah, forget about the paper.
So did they pay for your costs?
Yeah, so actually, I asked for all the free tickets for my team members. And then we use some of the hackathon money to pay for our flight tickets.
Travel.
Yeah, but as we get in, there was a hackathon too. So I also got the team to participate in that hackathon, and we won like 3 grand from that hackathon, which basically covered the trip. So like you can make the team work together, right?
Kind of patch things together as you go along.
That's right. There was also an investor pitch at that conference, so we're pitching, right? So actually the hackathon actually was really, really good. I'm glad it happened, because as the hackathon was happening, it's open, everyone's going around, and just like some people come and start talking to us, asking us what we do, and we just naturally be nice. And then I was on stage, talking and all that, and at the end of the conference, one guy came approached like, hey, I want to invest. Okay.
No, this is not typical. This is not typical. So I don't think we can transfer any lessons to it. Like destiny kind of like this situation where everything kind of fell into place for you.
Yeah, I think it's a lot of luck, but also like I think you need to put yourself out there.
Correct. You created the luck because you created yourself, you put yourself in that position for the opportunity to come.
Yeah.
So for the 100, the next part, of course, the 100 for what part of the company?
Yeah, that's right.
You didn't incorporate yet.
No, at that point there's no incorporation.
So then what happened? Tell us about this conversation.
So the conversation is like 100, and I was like, like, are you sure?
We didn't have a comment. We didn't have a, yeah, we didn't.
Yeah, like this is like just a random project, like and he is actually so this actually, as I understood more, actually he was starting an accelerator in Hong Kong. So he was offering 10 companies, each 100K, 3 months of office and 3 months of accommodation. So
the 100 was the services.
No, it was like was cash on top of that. Yeah.
Jeez.
Yeah.
So there was the Hong Kong government giving him this money? Or
No, it was like a VC fund back. It's actually now that I know, it's actually Animoca Brands money.
Who?
Animoca Brands. Yeah, so they're a big gaming company in Hong Kong. Like they used to be listed in Australia as well, but they kind of moved back to Hong Kong. So yeah, so as they kind of spend more time with them, that's one of our notable investors. It's a pretty decent sized company.
So then what was they asked? What did they, in exchange for, how much they wanted from the company?
Yeah, so in exchange, he was like, salary 8%. That's a price. I was like, someone's willing to give me money. I didn't believe that he's gonna give me money. So after the conference, we had a chat, and I was like, all right, cool, let's keep talking. He's like, yeah, I'll send you a term sheet, all that stuff. And he didn't send it for like another 2 weeks, and I was like, yeah, it's just some random guy just talking shit. Yeah, but because first time, like I told my team like one of my co-founder, he actually started a new job. He just went to an interview, started a new job. And on the day that his first job is the day that we signed the term sheet.
So part of the term sheet is like 8%, and then tells you have to incorporate. Did it tell you what jurisdiction?
Yeah, it was all like Cayman Islands.
Okay, Islands. Hong Kong.
Yeah.
So did they help you find people to set up the company for you?
So no, actually, so the premise was, okay, that's a term sheet, right? So we can sign term sheet as individuals. But the idea is once you go for an actual investment, like the safe note, then you need to incorporate, right? So we signed the term sheet at the end of 2018, and we incorporated at the beginning of 2019, right? In order to kind of finalize. So basically at that time I was in Canada, and I was like talking to some people in Canada. I was like, hey, we're looking for a lawyer to visit corporate. Then we're going to introduce to a lawyer guy. He's like, yeah, we'll put the paperwork together. We'll have a Canadian entity, and then we'll sign as a Canadian entity.
Oh, they wanted Cayman, but you guys said nothing.
The government rules on the term sheet is Cayman, but it's like, hey, we're gonna do Canadian because there's no point doing it on Cayman.
Yeah.
I was like, I just didn't see a point. Yeah. So basically, my co-founder, he's like on the first day in new job. I called him and he was like, okay, guys, thanks for welcoming me, but here's my laptop bag. I'm gonna go to Hong Kong. Everyone quits on that. Like on the day we signed term sheet, everybody quits their jobs.
Wow. Because they offered 3 months
Of accommodation, right?
Accommodation and basic
Office space. Yeah. So like I was like, yeah, we don't need to pay ourselves for 3 months.
Food's great over there.
Yeah, it's great and cheap, right? Like just go and see what happens, right? See if we can actually make something happen. Because
how many Canadians?
There's like a Brazilian, my co-founder is Brazilian, there's Australian, so like 3 people came over.
Oh.
Well, yeah, so
you
that's
guys all have to be in Canada, but no Canadians.
No. Yeah, we all met in Vancouver, Canada, but no. My co-founder, he had his permanent residency, but he was like, yeah, okay. It's like, let's just go. I was like, all right. And my plan was to be in Canada for 2 years. I had like a 2-year holiday visa in Canada, and I left after 6 months. Yeah.
So you guys been in Hong Kong for 3 months.
Yeah. So beginning of 2019, we went to Hong Kong. So was in Hong Kong just before the protest. It's a great time. It's a great time. Yeah, Hong Kong was beautiful. But yeah, so like that's why it's like the math doesn't matter. It's really the conviction that allows me to quit my job, and everyone's like, I tell everyone like, if we get this, we all quit. There's no point working this part time because like we were stretching everyone out. I was like driving the whole team really hard, and I was doing a lot of work myself, and it's like, yeah, unless we can do it full time, I just don't see the point.
Right.
Now, look, looking back in hindsight, I actually think like I would recommend if like now as I start another company, I would actually bite the bullet and don't raise. Actually now I think really hard about whether do I need to raise money, because raising money put you on a certain path, right? Raising money means that you want to move fast, right? At that point I wanted to move fast. I wanted to kind of build team quickly, see the long progress. But now, after I've done it once, I realized like, you can build a strong business going slow. There's nothing wrong with it. Like, I mean, the analogy that I use and the story I tell as a mentor of kind of few founders is everyone know the story of the rabbit and the turtle, right? And the turtle wins, like so saving the race, right? But there's also a side section as well. The rabbit realized like, it just was lazy. So the rabbit just went consistently and won. And the consistent one is strong, right? But then the third version is the turtle like, okay, let's race again, but like let's alter the course. change the course, and then what happens? The turtle put the river in the middle of the course, right? And then the moral of that story is like, it's your preference, right? As a founder, it's what you want, right? If you want to go slow and steady, you don't need to race, right? If you want to go fast and consistent, race, and you can still win, right? Like doing one or the other doesn't guarantee success. That's what.
Yeah, actually, sometimes circumstances will push you in one direction or another.
Yeah.
In combination, you may want to go slow, then you figure out, oh, there's a competitor, or the market, or there's a piece of legislation or law that's going to change your business model, so you get it faster. So
Yeah.
you just plug along, and you have to be. I think the key is to be cognizant of what your product is,
Yeah.
and what the solution is, and what market, and that will drive your decision.
Yeah.
And also the other thing that I think also personal circumstances. Some people, they have, depending on where their life is, sometimes they have certain expenses they have to cover.
Yeah.
And so that may drive it too.
Yeah, that's right.
So it's all different. It all varies and depends on the circumstances. But looking back, do you think $100,000 for 8% was the appropriate
It's almost a terrible
exchange?
Yeah,
That's too much, right?
It's a lot.
Yeah.
Like I knew right away as I started code. So as mentioned, it's an accelerator, 10 company got offer. And I started talking to the Silicon Valley guys because they invited some Silicon Valley. And I realized that's why Silicon Valley, they just live in the right mindset. They know all this. They got a much better.
Oh, they negotiated.
Yeah.
You just took it.
Yes. See, that's a lesson.
Yeah.
Always negotiate.
So
Always.
what were they able to negotiate?
Yeah, they basically got double the amount of right.
Oh, so they got more money for staying 8%.
Yeah, and then they got paid out. Like they negotiate across, and like they're real Silicon Valley guys. I grew up in Silicon Valley, like kind of in and around this all the time, right? So I think like once you're around that, go start hanging out with those guys a lot more. I learned about
Yeah.
yeah. So yeah. So like always negotiate. Whatever term sheet you have in front of you, negotiate like as much as they give you a term sheet they want you, right? If they don't want you, they won't, right? So negotiate and like if you have someone to help you negotiate, even better, right?
Right.
Like at that point, I just take this. I didn't have the network of people that I know that I can draw on.
So when you talk to these people, what they negotiated? What was driving them to negotiate the amount of money they wanted? Or was it more of a valuation at a certain stage? Or was it, hey, we want to retain a certain percentages because we know this product's going to need 2 or 3 rounds worth of funding. And so we want to be at 20% each by the time we get to C round. How did they explain the rationale?
Yeah.
So what's the rationale?
Yeah, the rationale of the early stage or the pre-seed where you just get 100K, it's all optics. Like like you present as yourself like I'm a Silicon Valley person, I know everything, I have my networks. Like obviously I can be a bad booker. Whereas like we more like a humble kind of I've never done this before, I've no idea what I'm doing.
Yeah, but they got 200,000, then 40%. So they must have like done math.
Yeah, as I talked to them, the really for them was like and like if now they no longer they stop operating after like that 1 year. Like we kept going, right? So like for them was just like, hey, we need like we need operating Silicon Valley is expensive, all the stuff like you don't really think too much and like pass it down and like they able to kind of like the one thing I like about them is they present themselves really well, very confident, and like you can talk a long time and you might not understand. Seems like they.
It sounds like you know what you want.
Yeah, but the science sounds like right, like like a pretty good consultants essentially, right?
Yeah.
Like and that's where like you like I would recommend for any founders to negotiate. It's really like all of us were thought like especially in Australia and in Canada tend to be like a bit more humble, but like you don't need to sell yourself short, like,
Yeah.
you know what you have. You can use Like, in the later rounds of negotiation, I use like, hey, this is a typical range. This is a typical percentage I need for the future rounds. I use all that in the later round. I'm just talking specifically in your first kind of tranche of money right now, where you first time founder and it's just the first tranche of money. And then really at this stage it's like most common nowadays, you don't even need to get into the valuation because you can just go uncap safe. That saves you so much.
Right.
And if you go into accelerator, they will usually have a standard. You negotiate based on that standard. Like for example, okay, if you can only give 100K, then my company is a bit further along than the other company that you have. Which I did for another accelerator, was like, hey, everyone else is like at the idea stage. I already have a couple of pilots going. I obviously should be a little bit higher, so the percentage you get is smaller, right? You can use all those. People tend to be at that early stage of that automation, I guess.
So basically, you're kind of negotiating around concepts as opposed to a price point.
That's right.
So you're talking about, hey, I'm a little further along, so you're taking your percentage and you kind of decrease it based on that. Not so much, hey, I'm valued at this, and this percentage is this, worth this much.
Yeah, because at that stage you can't really value.
Right. So, that's right. It's like a BS in, BS out, right?
That's right.
So, okay. So then basically for people, the lesson learned, I guess, for people who go to these accelerators, or now they even call venture builders, right?
Yeah.
Earlier in the accelerator, like where they actually help you find a founder and help you develop. Yeah, like Ant, right?
Yeah.
And so there is a standard, then you just have to make sure that you're comfortable living with that. And sometimes you can't really negotiate. You want to go in that program.
That's
right. So no, that's the early stage. That's really pre-seed.
Yeah, that is pre-seed. That's a pre-seed, like something to just get you started, right?
Yeah.
And it's what you do from there, right? So like as I went to Hong Kong, I was like kept hitting more users, trying to run more like information on the platform, and then I realized that Hong Kong is not the right market for food.
Yeah.
It's not a lot there, right? So I really left with options. Do I go back to Canada and keep pushing the people I have in Canada, or do I go to US? And for me, was actually going to US would be the best case. And so I started applying to a lot of accelerators in the US, because like after the Hong Kong accelerators, I realized like how valuable it's just not the money, but it's the network. So as an accelerator invested in us money, they give us office space, hotel, great. But they also created a lot of events, brought us to a lot of things, give us mentors and things like that, right? So that is also valuable, right? And so, I was like, if you want to succeed in the US, you can't go into cold, especially at that stage, right? Like, so you want an accelerator, and luckily we got accepted into Techstars, which is one of the prestigious one in the US, right? And it was even better. It was a fountain pop, which is a specifically to food tech vertical. And I've never heard of Singapore before that program.
We call it Minnesota. It's talking about a very cold jurisdiction.
Yeah.
It's up the northeast, well, actually, somewhere north central.
Yeah.
Of the United States.
So the program is in Singapore, Minnesota, and yeah, and so so I got accepted on that. But there was actually
Just you or the entire team?
the whole team, like because
With like 4 of them.
actually it was 3 at this stage. So
Okay, the 3 of you.
there's 3. The 3 people went to Hong Kong. Now Techstars wasn't that easy of a decision as well, because just before Techstars, we actually got into another one, because we have like when I apply for things, I apply like a massive.
Yeah.
Because like I'm like it's like same as conference. You the worst case people say no. If you don't apply, you get
Make sure you pick something. And you
Yeah,
got it.
because you just do one application and you can copy and paste it, right? It's not like that much. So we got also accepted into Iowa Agritech in Des Moines.
Iowa.
Iowa Agritech. So
Iowa's looking to the west.
yeah, south actually. Des
South,
Moines,
yeah.
Des Moines is right south.
Yeah.
So
That's true.
yeah. So I also never heard of Des Moines.
Canada. I mean, actually, you're from Australia.
So on that stage, like I get like all this Midwest stuff, because like food and agriculture is strong West, right? It just makes sense, right? And so I used a lesson right away and negotiated the Iowa ones. Like I had a great valuation at that stage. I was like, yeah, like we already went through a accelerator. We already have some funding. The other companies you're funding probably never went through anything before. They have nothing, right? So I was like, had a sweet ass deal on the table, and then Techstars accepted a week after, and they're like, this is our price, no negotiation, take a week.
What'd you do?
And it was lower than the Iowa one. And so
But had more name recognition.
that's right. And then for me it was like, man, you want to go to Harvard? Right? I mean, you got an offer and you're gonna say no because we cannot afford the price. Like,
Yeah,
yeah.
well, but the reality is some of these actually accelerators, they do, because it's for their own benefit later down the road. I've known some accelerators where they would renegotiate terms because the institutional investors down the road need a certain amount or whatever to make it work for them.
Yeah.
And then it just gets reshuffled.
Yeah. No,
it happens.
It's tougher conversations, but it can work, right? Well, at this stage, I was like, so proud of myself negotiating that after like, the blunder in the first one. But then like Techstars like, okay, fine. So then I had to match into because I couldn't have like they basically investing at the same time, so I couldn't have two valuation on the two sides.
Oh, you mean Iowa?
Yeah, so Iowa and Techstars. So even Iowa, I negotiated a much better value for Techstars.
But if you don't go to the accelerator, they still will make the investment. Is that what you're saying?
No. So because I had to accept Iowa before Techstars gave me the result.
Oh, you accepted already.
Yeah, so I accepted, right? So I was like, all right, fine. We'll go to both. We made both works. Yeah.
Right, so then you have to like adjust the
Just Iowa one to match. Yeah, but it worked out well because actually it has a complication in new this. So as I went to Techstars, Delaware C is the way to go, right? And I had a Canadian entity.
Yeah.
So I had to do a flip.
Oh.
And as part of the flip, I kind of had to redo all the contract with the first accelerator, with Iowa, like because I was like, all that stuff I did before.
So this just probably people who don't want to. You started a Canadian company, and so when you said the flip, what means is the reincorporating the entity so that it is established as a company in the U.S. Delaware C corporation, which is the typical format, legal entity used for investments, particularly for Techstars.
That's right. And like, they also, if you want to fundraise in the future, sign on it.
Yeah.
And honestly, it made it a lot easier for the due diligence for all the future rounds. Of course, yeah.
Yeah.
So
I mean, it's good because Techstars, they know what to do.
exactly, right? They know what they're doing. So I was like, I'm a Techstars. If they tell me to do that, I'll do that, right? But really, and it paid off down the road, right? At that point it was complex as well because like we were like trying to keep the IP in Canada, so we had to do like an IP purchase. That's like a bunch of complications. So, yeah. That's like you love this. Yeah. So then everything like nicely, and as Techstars come in, it goes straight into the Delaware one. So was like nice and clean. We had subsidiaries in Canadian, still kept that one. Because at that point, I wasn't able to. At that point, we started like, okay, we got the Techstars, we should start paying ourselves a little bit. So we started paying, but like we couldn't pay in the US because none of us were US citizens or PR, so we couldn't have our employment. So we had to do it in Canada, like just like going because like we still travel back and forth between, right? Because like my lab was still there, and then like we were basically in US for July until November 2019.
So you were nomadic for the first year.
I was nomadic.
From Australia to Canada to Hong Kong to Iowa, Minnesota.
Yeah.
Was it Minnesota first or Iowa?
I went to Des Moines.
Des Moines first in Iowa.
Yeah, I did Des Moines. I was like, oh my. That was like one high rise.
Basically prairie.
Yeah, that's
Yeah.
it.
Flatlands.
Yeah, flatlands. Yeah. So basically that kind of wrap up my accelerator, right? So all those guys, I'm like, after that, I was like, okay, I don't want it. We already went Techstars the best there is. don't really need to do more on this, right?
So stop here for a second. So this for the audience, the lesson learned is if you're doing accelerator at the beginning, depends on who you work with, you may or may not be able to negotiate.
Yeah.
Right? So yeah, there you go. So even there's no valuation history or
Right. This level, like the Techstars is a technology, right?
right.
But nowadays YC has a good deal. YC just like a factor thing and fact no. So if you get to YC, it's gold, right? Like, But again, it depends on your product. Like Techstars, I see a lot of the vertical specific actually drive a lot more value. So as I mentioned, the value holds a lot in the connections, in the investors, less so like the money as well, right? So as I've gone to Techstars, if I tell you right now, if I did not go to Techstars, I would not have a company. Like, Techstars experience really changed the whole thing.
So what did they do? What was the value add? They
So-
kind of like, refine the products, help you find partners, help you find.
Yeah, that's right. So in the first 3 weeks of Techstars program, they set me down with 100 different executives from all the different food manufacturers. No other accelerators can do that. Like, they're able to have that to really bring in like, all this key. And in the first week I pitched my product, nobody saw value. So I had to sunset the whole product. I worked on the whole year and kind of on the fly figure out the next product. And that's a product that we're selling today. But
It's based on the executives' feedback.
Yeah.
Or lack of feedback. Like,
Yeah.
we're not interested.
yeah, some of them are like feedback, but some like there's like, hey, we tried this, it's not like we did this before. Exact same thing. Here's a test result. No one's willing to I'll talk about provenance, right? Like no one's willing to pay for the provenance. Like I was talking to the head of marketing of carve, which is the largest food, and they have tried it. Like, yeah, we tried it and like millions of dollars down. Right. So like they validate the market and be able to get that insight. You see, like the value of that insight is huge.
Of course. Saving time, but money and effort and frustration.
Exactly, right? So then at that point I was like, all right, so what problem do you guys have that I can solve? And that ended up being the quality team, compliance management, all those stuff, and the quality you need to manage.
The quality,
The quality assurance team.
the quality assurance.
Within the food manufacturer.
Okay.
And the first team, I talked to all the different executives and got them to introduce me to their quality assurance. And I talked to all of them and I started drawing a Figma prototype and we click here to show up and things like that, right? And the first team I showed to after I got it together was the carve team. And I asked them if I built this, will you use it? They're like, yeah, we need this. And that's the product that ended up running in the company to where it's today, right? So if I did not go to Techstars, like I went to Iowa and I did not change my product.
Because they didn't have that.
They didn't have
that exposure.
Yeah,
Visibility into the commercial value.
That's right. They saw like, okay, this guy can do things, but like they don't really see that what is the most scalable, the one that will allow you to raise funding, right? Because like not every business idea can be suitable for venture capital, right? Like you need to see, and the way that I designed this product to make venture capital suitable is basically so one food manufacturer. So right now the largest customer we have is General Mills. And as they use our software, they will ask all of their suppliers to use our software too. And as a part of that, then the suppliers like the product, and they start like, hey, we need this for our own suppliers. Keep going up that supply chain. Right? And so you will, like the vision is still there. As I go up to every level of supply chain, I will get the provenance of the supply chain. But I don't tackle that straight away. I go like the information transfer of each layer first.
Yeah.
Right. So you see like that like
it's a different angle instead of starting out with that way, but it's actually basically you're building a foundation where each one is a necessary link to the next one, as opposed to trying to do the beginning.
The whole thing.
Yes.
Right? Yeah. So then suddenly the market is a lot bigger. Like before, the market was just like anyone with fully integrated supply chain really use it because provenance is easier that way. Right. But now like actually I can work across any supply chain. Right? And most of supply chain is pretty fragmented. Supply chain, everyone's selling to everyone. So that's why really that Techstars experience has tremendously helped.
So then that helped you with the product iteration. So then in terms of the finance funding side, valuation, at that point, once you change the product, did you need more time to get the engineering resources to actually coded or,
Yeah.
and so funding became an issue, right?
Yeah, so I mean, timing was important. So as you can go part of the Techstars program is a 13-week program. And the whole point of doing that is that you can kind of supercharge your speed of execution and show that you can deliver a lot in a short amount of time. So that at the end of the program, there's going to be a demo day where you're on the stage and you're pitching and you're saying that, hey, look at what we've done in 13 weeks.
13.
Yeah, in 13 weeks, look what we've been able to achieve, right? So for me, was the story is like, hey, I kind of flip everything. I now have I was able to sign a letter of intent with 2 companies to use a product that I haven't even built yet, right? Being able to kind of show that, like, hey, build a whole product from scratch, got 2 companies on board. Imagine if I get the funding, what can I do in the next 13 months?
Yeah.
And that's basically the premise, and that's allow you to fundraise. But that's a trick to fundraise like with accelerators, right? It's like yeah, no, it's not.
What's the secret? What's the secret
It's a
sauce?
secret, right? Like it's like you have to make people think that you can move so fast that nobody else can move as fast as you. And that why is if you they give you their money, then you will like turn that money around really quickly and put them into good use. Because there's a lot of good business idea out there, but you don't need fundraising because it's gonna take time for business to grow and even if you put more money in, it's not gonna make a difference, right? Like at that time when you're saying like, hey, you need developers to pull together, I was like, yeah, I can pull the developer team really quickly together, turn this around in a few months, and then keep iterating it very fast, right? But that means I need a bigger team. I need more money, right? So at that stage is when I started talking to a lot of angel investors for fundraising. Because at that stage, I'm still kind of wrapping up my pre-seed round. It's like able to have the Techstars, and hey, with Techstars competitors, you save if you invest.
That's one. It is one benefit of going to OIC or Techstar is that they do have a reputation, so investors are willing to take risk because they feel like a lot of risk has been vetted.
That's right.
And so, hey, they have this big idea, but now it's much more manageable and it can accelerate. And these executives are going to be helpful because not only are they going to help refine the product, but also become potential customers of yours.
That's right.
Right. So then when you had this plan, what factors did you need now that you have almost a product? How did you come up with a valuation?
Yeah. So
now
this is where you ask the question like how much money do you need to raise?
Exactly.
And this is where I start building financial models, right? Like in Techstars, the first week they right away like, hey, build a financial model, trying to figure out like your potential revenue, your cost, see when you're gonna run out of money, figure out like how much money you need to raise so that you can deliver the milestone, right? So for me at that point, it's like, yeah, I needed like 500K at that point to have a team to build out like 1 year of the pilot, right? Because the pilot was gonna be that 1 year period, right?
So the cost, the 500,000 that you need, how did you figure it out? How many headcounts and how much the standard kind of market rate for those types of engineers?
That's right. Headcount for engineers, customer support, our own salaries as well. So kind of let it all out as assumptions on an Excel spreadsheet.
Are there like templates that people use? I mean, I think that you probably come from banking industry, so you probably have a better comfort, more comfort in putting a financial model. But people who don't have that level of comfort, is there like a financial modeling template for early companies?
Yeah, so there are like basically Techstars or Iowa they all throw at us session or recording, like someone walking through how to build a financial model, and then they send a template. Okay, that's what we do.
That's like accelerator. You don't get accepted to accelerator, then are there
yeah, there's a lot like there's a lot because like all that YouTube now contains a lot, right? So like it depends like you always need to find those materials. No problem. Yeah. And so anyway, so that helps me to understand the cost. And also like you got to think like at that point you don't just model for your seed round, pre-seed round, you also model your seed round. Like, hey, when is my 500K run out? at that point, how much more do I need to raise,
Yeah.
right, to kind of keep going, right? Because like you can't extrapolate, right? I need 2 engineers, like or more in the future. That's oh, yeah, you can put a lot of assumptions. They're all assumptions in this.
There are assumptions.
Yeah, but you know, it's good enough for you to start talking to your investors. Okay, this is what I'm looking for. Right? Now, there's a trick at this stage. I always encourage founders not to talk about valuation at this stage when they talk to investors because it's already hard to get people to say yes, I will invest. But it's even harder to say yes, I'll invest at this valuation. And the trick that I would always encourage founders to learn, and I learned this from Techstars, is when you talk about investment, you just need to ask like, okay, so let's say, hey, you enter invest, yes. How much do you typically invest? 50, 100K, whatever. And like, you know, are you interested in investing? Like, I'm interested. So, you know, can I put you down for 50K into my round, right? And then like, okay, what's the valuation? It's like, well, I don't know yet, because you know, I'm still like, you know, at this stage pulling around together. It will probably be based on the like, you know, the most major biggest check to the round. So they get
They're gonna drive valuation.
yeah, they're gonna drive valuation, right? So basically they're like, yeah, okay, well, I'm not comfortable investing because I don't know. That's fine. But then you come back and say like, well, if the valuation is acceptable to you, would you invest? Right? They're like, yeah, if the valuation is acceptable, I'll invest. I'm like, yeah, okay, well, at that point, so like, you know, you ask them, you mind if I kind of share with other people that, you know, if the valuation is acceptable, you will invest in my round. And if they really like to help you with one, they're like, yeah, okay, you know, you can tell us something. Yeah.
Yeah, it doesn't hurt them, right?
It doesn't hurt them, because like they can pull out if they at any valuation they say no.
Exactly.
All right.
Everything's all verbal.
Yeah, but no, like actually, like, do you mind if I'll send you an email? It's like, hey, and I like clear it out, like if the valuation is accepted,
Yeah.
you invest 50K.
I mean, there's indicators of potential investment. Of course, you're
Yeah.
not making entirely up.
Yeah, right. So I just want to make sure that so because the reason why is like you go and talk, right? And like you first 50K is hard, right? But then you got 50 and you know that guy's like, oh yeah, you can talk to my friend too, and you can tell him that I'm also interested because the valuation is okay. You can do the same thing again. And before you know it, you have 500K together, 10 guys.
Yeah, because it also at that stage, investments become more comfortable and more palatable when you know other people are coming in.
That's right. That's right.
Especially other people, your friends too.
That's right. There you go. You see? So then suddenly, well, no one's discussing valuation, but you already have 500K to your round, right? You're in a position to set valuation now, right? That's when you want to start thinking about, all right, you know, out of all the guys who will agree to, who's most likely going to accept my valuation? Right? Think about that.
Yeah.
And then you start talking to the guy, maybe the guy that put in 100K instead of the guy that put in 50K, right?
Yeah.
You want
So
to
make sure he gets in.
That's right, right? It's like, hey, you know, like, you know, this is a typical market for this stage. And like, I went to Techstars, like, I talked to the Techstars guy, he said, this should be that. Like, are you okay? And I was like, yeah, okay, I'm good.
But this is actually how it works.
Right.
I mean, this is like, that's why I wanted to kind of peel back, you know, the actual conversations, because sometimes people make it too scientific.
Yeah.
Because it's not. I mean, the way you describe it, there are stages and it's scientific in that kind of way, but it's not like number crunching, like where you can do it beforehand.
Mhm.
It's more something you massage and you kind of shape.
Yeah.
You know, you take a little clay here and you don't know how it's gonna look. And it depends on what people want and you shape it as you go.
Yeah. It's the stage where the product's still a prototype. You don't really have any real contract on the table, right? Like it's like any number is just what you put together, right? Yeah. And so like you gauge with people, like I talk to people, like and then as soon as that guy okay with that valuation, you go back to all the other guys and say like, hey, you know, I have a guy that's already okay with this, it's 300K. Are you comfortable? And 9 out of 10, people like, yeah, okay.
Okay, so what is your success rate when you did this? I mean, how many angels did you approach and with the same pitch? How many did you get?
I think so for the pre-seed round I had five angel investors
For about $1 million?
no, this is five.
500K.
Yeah.
So that's pre-seed. And then for the seed round.
Seed round is a different. Seed round is a VC.
Yeah.
So seed round is different. So basically, that angel round for 5, I talked to that point. I talked to, I think it was like 40 angel investors, right? Angel groups and all that. So that's a large, it's not like a clear success rate. You don't do it like you get a lot of no's. Like a lot of times I try and people, yeah, I'm not calculating that.
Right.
But I got 5 who actually were like, actually I like you, let's do it, right?
So you have to have some thick skin.
Yeah, we still have a thick skin. That's not like math, no math. Yeah.
So then the seed round with the VC. So how do you go about it?
Yeah, so after that, so a little bit more about my Novan life, 2019. So end of 2019, I got my pre-seed round together, right? And actually, there's like one more trick with closing the fundraising round. And I was lucky because I was in Minnesota, and Minnesota had an angel tax credit program. And angel tax credit program will run out at the end of the year. So it's hard to bring the money in. Even though people committed, it's hard to get it wired.
Yeah.
And I was like, guys, if you don't wire it before this day, you're not gonna get the 25% tax credit. And you need to leverage laws around you to close around. That's another trigger.
If there are such things.
Yeah, and you need to look for it. Right? You need to be on the lookout, right? Because you don't think there might be, but there are potential. And you try to engineer things in certain ways, right? I also use a Techstars demo day. I was like, hey, we like each other. Going to Techstars demo day. If I already have 30% of the round committed, it's most likely I'll be able to kind of present that and close the rest, right? Because you're on stage, people like you, and you can already say I have 33% of it, third of it committed. Like people, oh, I feel interested, I'm more interested. Yeah, right. So you use that a different things to draw that in, right? That's and it's harder to do that later on. With Accelerator, it's easy because it's those arbitrary days you can use. Later on, it's harder. So later on, as 2019, decided to move to Minnesota. 2 weeks later, COVID lockdown. Yeah, I had a slog through 2020. By 2020, I should move back to Vietnam because Vietnam was a great place. US was Minnesota. George Floyd was in Minnesota. I was going to curfews and all that stuff, on top of COVID. I was on this main street in between St. Paul and Minneapolis, and every 5 buildings there's a burn one. And I was like, I'm in war zone.
I mean, it was pretty bad.
It was terrible. And so I went back to Vietnam and actually stayed in Vietnam for 2021. That's why.
The whole year.
Yeah.
They were on lockdown too.
Yeah, but I mean, yeah, but
those burnt down buildings.
Yeah, I still feel like a civilization, right? That's how I connected to Don. I think that's to know each other. That's when I met Don. Went to Ho Chi Minh City.
Which Don?
Don Fan.
Oh, Don Fan.
Yeah,
Don Fan. Yes.
Yeah. And Don also introduced me to some more kind of investors around here, around me to kind of kickstart the conversation. And one of the VC and I'm leading our seed round is in Ho Chi Minh City. And because of my time spent here, talking to different VCs, kind of just putting myself out there, I was able to kind of.
So who led you around?
Touchstone.
Touchstone.
Yeah.
Okay.
Yeah.
Former founder of I think
Yoga.
Yoga.
Yes, right. Yeah, great team. So yeah, you met me in 2020, 2021, and I didn't think she would invest. She didn't think she was going to invest. You just you build those relationships, right?
Yeah, the more conversations you have.
When it comes to VC, you can't be quick.
That's correct.
It's something that you already have a company running, the kind of tracking you see you pop up here and there, and by the end of 2021, they're actually, I like your progress over the year. Looks like you're looking to raise your seed round. Who will you, right? Yeah. So
I think that's a very good point because it's like brewing. You got a mixture, you got a pot,
yeah.
And the pot you have to have some basic ingredients, and you keep on brewing and brewing. Make sure that people around you smell, and see the progress and see that it's coming together.
Yeah.
And sometimes you need a little bit more salt, a little bit more pepper, a little more whatever flavor, and then slowly, I think people will start seeing what you see, and they will be more comfortable in investment.
Yeah.
So I think that's very key. That's really helpful.
Yeah.
We're actually coming to the hour.
Yeah.
That went by really
Yeah.
fast, really fast. We're really thankful for your thoughts and sharing the process in terms of raising money. And I think at the beginning, if you go down, it sounds like if you go down the accelerator route, it's pretty much set in terms of like your valuation. There's some places where they're willing to negotiate, but a lot of the more brand ones they have a set percentage, and most of them are market, and they're very reasonable, right? That they're especially in the US, because they really want your product to succeed.
Yeah.
So they understand that later stages that other investors will need to make a certain amount of return. So I think that if you go the accelerator model, just make sure that you check the market rates and compare to other accelerators to make sure that you're not getting fleeced.
Yeah, I definitely.
Yeah. And after that, start thinking about doing financial modeling, looking online. It sounds like if you're not in an accelerator program, look online to find, a template to build on your financial model, in terms of like what you need, and make sure that the financial model uses, market rates for where you want to do business.
Yeah.
Right. And then the third, I think, element, lesson that we got from that today is like, continue the conversation, talk to people, talk to as many people as you can, develop a relationship, and things should fall in place.
Yeah. Just I'm gonna have the last part there is like every time I go fundraising, I always budget 6 months fundraising. And before I start the 6 months fundraising, I spent 1 month just listing out all the investors that would understand my product and my industry. So like I would not go to a B2C investor, right? I want a B2B investor. I wouldn't want to go to like hard tech or a hardware investor. I want a software investor, right? So takes effort, takes a month of like research and preparation for you to be able to create a list of targeted investors, because you don't just want to talk to any investors.
Actually, that's very key. And that's something I think you thoughtful approach, because sometimes people will feel like, I go to a place and I speak to all these investors and angels. I mean, it's working hard, but not hardly working. Basically, you're like putting too much time in it, and it's not productive. So that's actually very good advice to come up, think about your business model, understand your business model, and then find an investor that will at least understand that model, and then so that you can have a higher chance of success.
Sure.
Right. And then the people who don't really care that are really early stage, and people who are family and friends, but later on institutional rounds, it is that's right, unless they're really desperate and they're looking to deploy capital.
Yeah, but that's not in this
not in this environment, right? So, yeah. Oh, thank you so much. I mean, this is really helpful. I think that we typically summarize it, so hopefully, we'll get that summary for everybody, because I think this is really valuable, concrete, crystallized action items that you can do, and people can use it in their journey, their venture.
Yeah.
All right. Thank you so much.
Oh, yeah.
Well, that's it, guys. We're coming to the hour, and really thankful you guys are joined us, and we'll look forward to welcoming you again in the next month's Spotlight. Take care. Bye.